Good afternoon, everybody. Wall Street Jesus, the Tuesday Degenerate Roundup. Got a packed house here. Like, good to see. Usually the summer rolls around. A lot of people out there like to take it easy, slack, pay less attention. The market, money, not as big as a priority. I like to see degenerates like myself putting the market above everything else in life. I don't know if it's the right thing to do, but makes me feel better about myself anyway. But good to see everybody coming off a great week last week. If you're bullish, if you're a perma bull, even better. And we come into this week with an interesting setup, and I wanted to share a couple things with you guys, even members of the Steam Room. Something I noticed, actually, I think it was Monday morning. And then Sentiment Trader reiterated it during the day, and I took a further look just to confirm it, and I'll share it with you guys. Something to keep an eye out, the rest of the week or going forward here in general. But we came into the week, kind of thinking we were going to get some sort of reversal or some sort of chop, right? After, what is it, 6 straight up days in a row, okay? And that's where things get difficult, right? For me, it's always that turn, the initial turn where I feel most confident, getting aggressive. And then as things stretch out and run away from you, you always want that breather, right? That pullback or consolidation, setting up, a secondary entry. And this is something we discuss on so many of these webinars. More and more, it seems like that secondary entry, it's like a dinosaur these days, right? Everything is V-shaped. If you miss the initial turn, you have to get ready and start chasing. Forget waiting for pullbacks, forget, sitting on bids, waiting for your price. All that goes out the window, because if you look at the last rally off the December correction, right? Outside of this little pullback, which was a couple days in, it seemed like there was never even a down day ever again. All right. So that could get frustrating. I don't know about you guys, but definitely for me, because I don't like to chase, right? I've been working my whole career. I've been trying to get myself to the point where I stay away from chasing, especially stuff bright green. And, when you have that V-shaped hardcore rally, sometimes you don't have a choice. Now, granted, you can wait for, some of the flow to spill into some of the laggards that haven't moved. But in reality, what's that? The first couple of weeks of a rally, and then, pretty much everything gets hit. So that's why I think now, even as stretched as we are, we have to stay on our toes, right? Ready for whatever this market's going to bring us. Now, we're going to have Fed meetings, the summer rolling around, the whole 9 yards thrown in to the equation here. But based off what we've been seeing on all these pullbacks, all these corrections, these minor pullbacks, everything's been a V, and we kind of want to be ready, especially if that flow is there and they're buying aggressively. We want to be ready to participate in some sort of fashion. All right, but we came in this week thinking at the least we'd get, some chop at some point. All right, where we could take a step back, let some of the shorter term sentiment readings cool off a bit, because obviously they're going to be hot after a move like this. Let the bulls get a little reality check, right? Reel in some of that bearishness again, that maybe things aren't as good out there. And then we can see where buyers decide to step in, to some weakness or consolidation. So far, for the most part, the last couple of days, last week into this week, what I've been primarily focusing on, and I'm always early when I do this, but that's okay. I'd rather be early, because those reversals sometimes are too hot and vicious to handle. When you get several days of a rally like this, I like to start focusing on just the laggards. Okay, so for me, like I've been playing names like, the TME and playing for that squeeze, the fetch, which actually had a nice day today. I wasn't in it for this, that squeeze. So that sort of thing. I played the gap. I actually flipped it into this morning strength. Uh, may have still more to go. So that's what I like to do when things are a bit stretched, because what happens is Netflix, the Facebook, the Apple, we've been seeing sweeper activity every single day. All right. And it's almost like when they roll, right? Those of you who've been watching Flow with me, these sweepers will roll and roll and roll until their last batch of positions go under. It doesn't bother them one bit. That's how they catch the bulk of a move. Okay. So as long as Apple continues to have momentum and head higher, we're going to see sweeper activity. All right. But logically, you got to say to yourself, is it going to make, can you have the same confidence in the order flow that you had down here, up here, 50 sweepers deep by now? So, that's the way I look at it, at least. And so I shy away from a lot of the hot names, and I look for some of the flow to spill into some of the names that maybe haven't rallied as much. Okay. Until we see some of the hot names come in. And we've been seeing that already. Today as a whole, nothing really went on today. The biggest positive out of today was the put to call back to somewhat normal, right? You had a 5-hand. I didn't really see the equity put the call today, but you had a 5 handle on that equity put the call yesterday, coming out of yesterday. You don't want that. You know what I mean? You don't want to get aggressively long into that. So today, even though it was just a reversal, not much weakness, does a lot of good. It does a lot of good for over the short term anyway. Also, the squeezometer, for those of you who may not be aware of the squeezometer, it's similar to an intraday put the call that we follow. Going into the close, I think we were right under 40. All right, so that's well under neutral, and going into tomorrow's session with a hell of a lot better setup. Okay, so we're in good shape there. As far as intermediate term time frames, right? As far as sentiment over the intermediate term, obviously, things aren't lined up as they were at the lows, but there's room. There's room for upside on a lot of those things. All right, thanks to the most recent pullback. So that's why, again, just to reiterate, we want to be ready and keep an eye on the buying, the order flow that comes in, because if they start to get aggressive, and depending on what they get aggressive on, we got to, really pick our spots and see what the hell we want to get long and how we want to play it. All right. And the good thing, like I said, when you get a pull about, let's say, for example, you have an interest in some of the names that have had the strongest momentum, even just for trades, right? The software names in particular. You got a little tug today, right? You got a little tug. I didn't see Twilio too. Let's see. Yeah. And, look at some of these things like MDB. Look what this thing did in a matter of 3 days. You see the move on this thing? Went from 130 to 185 in 3 days. So, something like this you want to see. Again, even if you're not playing this name, just as a whole in the group, you want to see them chill out, take a little bit of a breather, and then see what the flow looks like, into that breather. And I always, tell you guys, what keeps me in check is basically sweeper activity, right? So if we go multiple days, which leads into weeks of awful sweeper activity, meaning not much buying coming in, that means there's a good possibility, more than likely, I'm not going to be long much, right? Because Again, that's solely where all my stock selection comes from. So if they're not buying anything new and they're not getting aggressive in any new setups, the likelihood is I may be long stuff that I'm already long, but I'm not going to get aggressive, into a tape that I shouldn't be. So that's what I stress to a lot of you members out there, whether you're trading those particular names or not, again, as a gauge on smart money sentiment, you want to see them buying stuff. The more, the broad, the merrier, right? The more bullish the setup, right? If they're tattooing, every software name in the group and they didn't hit the one you like, doesn't matter. You can still own the one you like, but you could feel even better about it if they're buying, right, other software names. So that's why don't get hung up on the individual names unless you're just trading off the flow like I am. You want to see them, again, risk on. That's the best way to put it, right? It's our measure of risk on in real time. If they're aggressively sweeping call side in the options market, more than likely they're doing even more damage in the equity market, and that's our signal that it's go time. All right, so that's what we're looking. That's what we're looking for from this point here. Before I get into anything else, because there's no reason to drag this webinar on too long, I'll take questions and names from some of the Twitter folk out there who are curious to see if there's any action. Here is the thing I wanted to share with you guys, okay? So this now, I gotta put it in simple English because I can confuse myself sometimes. This is the COT data, right? And since the December correction last year, we've been concentrating on this a lot more. The only reason, because prior to that, there was no real correction in this market, and there was not much of a signal coming out of this data at all. All right, maybe some in crude that we don't really, trade, gold, futures, stuff like that. What caught my eye here is that if you remember coming out of the December correction, they stepped on the gas in NASDAQ E-minis. You remember that? All right, off the bottom as the market was rallying, which is rare for them to do, they were not only taking off hedges aggressively in NASDAQ futures, they were taking them off so aggressive that they ended up net long. Okay, you guys, most of you remember that. We spoke about that, several weeks, and why we should stay long the market. So what this is telling us here, and you could see off this chart, okay, the Dow futures, all right, and this is a chart of the smart money, by the way, and you can see right here the Dow futures, and not in the S&P, not in the NASDAQ, but in the Dow futures, they are net long for the first time since the Bazooka Joe lows, which I found interesting. All right, so you can see there's been bumps here, right, into those lows, and you can see, right, they put hedges back on as they rallied, unlike the NASDAQ one, right, we were looking at. All right, same here into this low, and you can see they put their hedges back on as markets rallied. But here into the bounce already last week, they stepped on the gas and net long for the first time in a long time. And the reason I found that even more interesting, this has been one spot to shy away from, right? Like you can maybe understand NASDAQ and tech related stuff, why you would want to get aggressively long there, right? Some software recession proof, a lot of them at the time were trade war proof, right? Before this whole new can of worms opened up here. So now they're going into the industrial names, which have been beaten up the most, right? And again, we've been hoping for rotation at a flow into this stuff for feels like forever now, and we haven't really gotten it. even to this day, even with this signal out there, still there's been nothing out there in flow that's telling me that sweepers have been getting aggressive. All right. But if you remember, again, I'm using that NASDAQ in December as an example. First, we got the signal that the commercial hedges were getting aggressive in the NASDAQ futures. Then we saw the flow, the sweeper activity erupt. So maybe that's coming. Maybe that's on the horizon. But that's what I found really interesting. Again, it's not that they got long into just a little pullback, right? Net long, but what they got long. Anybody, before we even start talking about this, anybody have any questions on what I'm talking about here? Is this foreign to anybody? Did I explain it somewhat reasonably here? Make sense? Do I have, hold on a second. No wonder I'm not even seeing questions. I don't have it in the right time here. All right, go ahead, shoot now. Any questions? Go ahead, ask. Any questions, comments, shoot them out. Make sense, Stephen? Good. So, what it means to me, and it's more, I guess it has an influence on the market as well, but I'm just saying there might be that outperformance, okay, which we were hoping and thinking and talking about for a while, into the industrial stuff, maybe just the China trade war stuff in general. Okay. Again, a lot of the stuff that got left behind, a lot of the stuff that got left behind, even as markets rallied, right? We've seen squeezes, and these things can't get out of their own way. Pull up a chart on MMM, Caterpillar, all these names. They've been an absolute nightmare. Nightmare. So again, MW, I would be, your guess is as good as mine. This is what I see here, and you can see, right? You don't need to be no sentiment aficionado or know this information. Just pictures, sometimes they tell 1,000 words, right? Every time you see these guys step up, they've nailed bottoms. Nailed them. Okay? And again, right here, I wasn't expecting it. And granted, the other thing is too, and you guys know, those of you who are members know, right, we could use a Neil Diamond sweep. Good call, Tree. Those of you know that these guys don't necessarily, we haven't had that much of a pullback here. Okay? Even before the rally. Obviously, we're closer to new highs now with this rally. But it wasn't that significant of a correction for these guys to get net long. Like, think about 2016. There's your example. 2016 was, you think about if you remember 2016, the news around 2016, it was a little spooky. It was a little spooky. Deutsche Bank was ready to go out of business. Credit was unraveling. So this is not last December. You have a little pullback here, and you see something like this, you caught off guard. But the one thing I will say, and it could be the reason for it, the opposite of this chart, okay, would be the spec players, right? The smaller degenerate spec players that are almost always wrong, right? And you guys know, we saw the weekend update, Friday's update, as far as the spec players out there, and they're net short again. Now, granted, they've probably been getting squeezed, but that could be a reason why these, hedgers here got a little more aggressive than they usually would off a minor pullback. All right, so that's the one big thing I wanted to share with you guys today, because again, on the Saturday members only webinar, I did not catch this, to be honest. You know why? Because I don't usually look at the Dow Jones futures individually. Usually if there's a move here, I'd see it in SPY or S&P 500. Not SPY, S&P 500, yes. Or, NQ, NASDAQ. Very rare do you see it in the DJIA and not as much in the other two. So really interesting. Really interesting. All right. And as a matter of fact, I think, let me see here. When was is this Trump election right here? When was Trump election? The end of 16? So they didn't even know. Yeah? They didn't even get as aggressive there. So is the play here to buy puts? No. What do you mean buy puts? How'd you get buy puts out of this? The play here is telling us PSY puts. No, the play here. Oh, I see what you're saying. You're talking about go long industrials and short SPY. I don't know if I would fool around like that. It's an option. So you're talking about a pair trade type thing. The way, James, that way I'm looking at it, and the way most of us degenerates are looking at it, that would probably be the more conservative way, and that definitely makes sense. I misunderstood what you were saying. But we're just probably going to look more towards the China trade related names that have been battered as outperforming squeeze type scenarios if we see flow there. You know what I mean? So I'll give you an example. Prior to seeing this, if I saw some flow in that space, I'm not going to lie to you, I'd probably shy away from it because they've been awful, right? They've been so bad. Like the squeezes, even when you get a squeeze there, you got to be so quick to get out because they've been that bad. So now I'm looking for signs out of the flow that some aggressive money is coming into these things for possibly a larger move. All right, so that's what I'm looking for. And here's the logic too, guys, okay? Let's say this market flattens out here, possible, right? Let's say we start drifting into the Fed meeting because the market wants a rate cut, whatever the case. I'm just giving an example here of what could possibly happen. All right. If there's any legitimate selling or drawdown that comes in to this market here, what's going to happen on this front, right? They're probably going to step on the gas further. You understand what I'm saying? So you got the smart money here, which got aggressive. And again, granted, they got a lot of the squeeze last week. So that kind of is the bad part of things. They got a little bit of a cushion. But the smart money got aggressive last week into this. And you guys remember what happened with the NASDAQ. Basically, all the indices rallied hard. But let me just show you like what we saw in NQ that time. All right, so what we saw that was really strange the last time out of this camp. Okay, they got long, they started getting long into the lows here. Am I in the right lows? Yeah, I'm in the right lows. Right, where you see this 9? So right here is where they started to get long, started to take off hedges, I should say. And rather than as the market pushed up here, they started to put hedges back on, which they normally do. They did the opposite. They got so aggressive, not only did they take off all their hedges, they got net long NASDAQ. You understand? And that was pretty significant because it's not something they usually do. Not what they usually do. S&P commercials were large net short into May highs and flat at the end of last week, but that is like S&P commercials. Oh, the S&P, I didn't see much difference in the S&P guys. These guys are in the Dow. The only two significant takeaways from the COT camp was, again, some buying in the DJIA and small specs completely net short again. Completely net short. So those are my my two takeaways. NASDAQ didn't even have much of a bump either, if I remember correctly. There wasn't too much going on there. Let's see other questions. David saying, Lucci, I'm not Lucci. I'm Wall Street Jesus. Let's see here. I have a question about the sequence counter. Oh, that's those are DeMark exhaustion signals. Tweet this. No, it depends on Thinkorswim. It's called sequence counter, and you just might want to color the arrows to make it a little more visible because it's pretty blah plain. Yeah, Ranchero, they got me a little thrown off whack here. Yeah, again, your eyes, there's no reason to get wrapped up into the data because you probably won't understand it anyhow. And that's no knock on any of you. What I'm saying is your eyes do you the biggest justice, okay? You can see every time these guys slam on the gas into weakness, what happens, okay? Every time. Every single time they slam on the gas, right? This is the zero line here. This is where they're net hedged down here, which is for the most part. Okay, very rarely do they get net long. Very rare. All right, you can see back here, there was a period they got net long. All right, pulled some off, got the dip. This is like this scenario I'm talking about right here, right? Here, they were basically a little under the zero line, so they weren't that long, but they got the dip. What's going to happen? Whoop, they bought the dip, right? They take some hedges off. They put some hedges back on again. They get a double dip. Whoop, we'll take that double dip. And then you see, as the market rallies, this is normal. This is what they do. This is what they usually do into strength. See this? As the market rallies, they put their hedges back on. That's their game. Their game is not to get net long unless they feel they need to get net long. There's a reason to get net long. All right? You see how aggressive they were here, right? Oh my God, I got way too many yellow circles on here. Hold on. Tim is going to get a kick out of that. You see this one here? Okay. Again, the COT data, if you're pulling it off some site, it can get really, really confusing. You know what I mean? Really confusing because you don't know who's who. They break them down. You have no idea who's who. You don't know who's long, who's short, who's this, who's that. Sentiment Trader does a pretty good job of that, as you can see. All right. But you can see here when they get aggressive, really aggressive, right? And they got really aggressive into the December lows. But even then, not net long. Net long for the first time since 06 here. All right. Well, you get the point. Do with it as you feel is best. I just wanted to share that with you because I found it significant. All right. What else did I have to share with you guys before we get into questions? That's it. Today's flow was, what we normally see on day one of, a little stall out where buyers got tired. This was the noteworthy bet of the day right here, GD. All right, that's a defense name. I'm ready to say Goodyear Tire again. General Dynamics. July 180s. This is more of a bounce bet, but pretty decent size for this name. All right. They're going July 180s into some weakness. And you can see here, look at the chart here. You'll see what they're probably shooting for here, unless they got something up their sleeve. But you had a pretty big reaction off earnings, reversal. Here's the pull. Here's off the rally. And today was the first down day off that rally. And they're playing the July 180s. All right. And a defensive name for the most part, so you're not dealing with any nonsense there. What have the other ones been doing anyway? I know you had a deal in the group and all. LMT. Wow, this thing's been hot, huh? This thing looks like the stronger one of the bunch. I guess they're hit or miss, some of these things. All right, so you got General Dynamics. The only other play today, newish, was this QEP straight up lottos. Okay, straight up lottos, June, out of the money calls for a dime, and I don't know. Okay, there was some decent volume there, but granted, they're 10 cents, so it's peanuts. All right, but straight up lottos, they're 10 cents for a reason. I played a little of the stock. Maybe I get lucky by accident and a bounce, and I can dump it. Again, I've been playing a lot of equity. You guys know that more and more these days, so I could be a little more nimble. But that's the way I played this thing. But again, they're 10 cents. You know, they're 10 cents. So if you're looking to take a shot. Some other names that caught a little bit of action today, but again, long in the tooth. Tesla, you got the event, right? We saw some real nice call buying into the lows. It was a nice setup, right? There was $1 million sweep. Now the size has come down dramatically. You've had a hell of a move, and now you're going into the shareholder meeting. So a couple of weekly bets there. I know you guys are going to ask about the little Amazon guys, so let me pull them up. Back to back, two little guys in Amazon, 1930s weeklies. So they came in with this one first at $2, and they came in with this one. Okay. So again, small spec bets. I wouldn't treat this as initial activity in Amazon. You know, Amazon, I don't need to tell you, some of you guys stare at this chart all day long, but had a pretty nice boing. So, somebody's thinking there's a little more left in it this week. All right, so same thing like Netflix, yeah. And one thing you guys got to understand too, right? The Amazon guy, Tim's saying from 3.5 to 35, those calls went. So listen, maybe lightning strikes twice, but understand, you had more juice off that than you do up here now. This thing, like many are stretched. It's possible. Don't get me wrong. Amazon can do anything, but I'm just saying, don't scratch your head wondering why these things didn't quadruple up here. We've been seeing, you guys know, we've been seeing a lot of these weeklies now flip. I saw a couple of you not ticked off, that's the wrong word, maybe frustrated, annoyed that you saw a couple of those small weeklies flip for like 50 cents. But that's what they do, guys. That's what they do, especially when you come off a hard rally like this. They catch some momentum and they're looking to just ride some juice. All right, so don't knock yourselves out. Beyond, let me talk about that as well too. I posted, let me pull that up so you guys see. All right, and listen, you're not going to hear this, right, from anybody on Twitter. You're not going to hear this if you're looking, you're not going to want to hear this if you're pulling up a scan, if you have a scanner looking for, size bets. All right, here is the flow. This is off Trade Alert. This is the flow, okay, the overall flow and beyond. Now, if you think today, okay, you can pull out a 500 lot sweep and have high confidence in how clean that order was with this type of action around it, good luck. How do you know if somebody didn't close a couple hundred contracts of calls for a profit that he owned from 2 weeks ago and rolled into 500, the 500 Decembers or whatever the hell it was. You understand what I'm saying? So this is when I say action's not clean, because there's no way you're going to be able to see it. There's no way. Even at that point, if you don't see anybody closing an existing position, they can do it later in the day. We saw that in TLT today, right? We saw a call sweeper come into TLT. I was like, wow, they're buying TLT up here. 10 minutes later, we see TLT calls close, right after the fact. So you play it. You may want to talk yourself into believing it's a dip buyer, right? But the truth of the matter is, if you're playing off floor, you're going to understand that the clean, the sharp action, right? You hear me use those terms a lot. You're going to put that on a completely different upper shelf, top shelf, like they say in hockey. Okay? That has to be, your risk has to be managed completely different there than action like this, where you have no idea what's going on. So that's the problem. And here's the thing, okay? It happens a lot, all right? The reason why it happens a lot where action gets messy, when you have a stock that does this, okay? When you have a stock go parabolic like this, yeah, up here, you think the action's going to get cleaner up here? That's why, again, I preach to you guys, you're always looking for that initial activity, right? Out of consolidation, where it first starts to catch sweeper activity, because that's always the cleanest. Always the cleanest. There wasn't, much buying prior to that. Up here, it's never clean. Never. And even if you think, oh, yeah, this looks like a clean buyer, you still never should have high confidence in it, just because I just showed you. Look at that flow. You can examine it till you turn purple in the face and you'll never figure it out. All right. And besides that, yesterday I saw them late. Otherwise, I would have tweeted it out. I got a gazillion mentions, questions on Beyond. Oh, somebody just bought $20 million worth of Beyond. That's not legitimate buying. There's nobody buying $20 million worth of calls in one block and gambling. All right. What they're doing is, again, when a stock does this, okay, these funds, hedge funds, what they want to do is they want to take off some principal risk. This thing just went parabolic. Okay. So if they own equity, right? If I own 100,000 shares of Beyond and I still want to have exposure, but I don't want that much principal at risk, this thing could drop $100. Okay. I'll sell my equity and I'll buy a block. I'll negotiate a block for 5 million October calls, right? So worst case scenario, I'm out $5 million. Better than having 100,000 shares at 180 drop to 50, right? So that's what they do. Stock replacement. Anytime you see a 10, $15 million block, okay, you take that block, right? You see it wherever you see it, on a scanner, maybe you're a member of a steam room. You take a nice crayon, maybe yellow, so you can see it bright and clear, and you go like this. What I like to do is when I see a block like that, right, I just go like this. That's what I like to do when I see blocks like that. They're useless. Useless. Completely useless. All right? We see them all the time, too. Blocks are the devil. They really are, though. They've really become the devil. Okay? It never used to be this bad, but now they're all negotiated. Okay? Here, look. Here's another one. CRM, where was it? Look at this. Okay? Big, right? 15 million bucks. But where's the blocks I posted here? Didn't come through here? Maybe it didn't come through. I'm having trouble with Twitter, by the way. I know a couple of you are having it too. I post on Twitter, and my posts don't go through. Some go through 6 hours later the last couple of days. But anyway, there was a gazillion blocks. There were 3-4 blocks in CRM this morning that was tied to this order here. All right, but that's just the way the game goes. All right, so it's not all about size. All right, sometimes you get a $300,000, $400,000 sweep is more than enough size if the order is aggressive, more than enough. So that's that. Opening put seller in Zillow. I didn't see that. I'll take a peek. C-Train. I did see SFIX put selling. I saw that. Yeah, this SFIX had a nice move off earnings. By the way, I don't know if you saw it, C-Train. The other one that caught flow off this SFIX, this fetch, had a real nice move today off the bottom. Real nice move. All right, let's get to a couple of your names and questions. Yeah, the fetch. And AMD. I mean, AMD's been great. AMD's been honestly throughout what the that's the market gods. What I do. Hold on. All right. Out of everything since, through the pullback, the recent pullback to this point now, if you ask me what name probably had the best overall sweeper activity, I would say AMD. It's been incredible. So, a breather here, totally normal. And, they come in hitting this out of a breather, probably have higher to go. I mean, what's to say not? Here's the thing that for options becomes the pain in the rear end. But it's bullish, right? That's the tough part about options, right? If you're holding calls through this, you're cursing AMD out, MJ, wherever you are. But meanwhile, this is the most bullish thing you could see, right, throughout a pullback in the market, right? Where's Tim, my technician? The market's choppy, volatile, pulling back, and you got AMD doing this and flow, nevertheless, in there. What's more bullish than that? The problem is, again, if you're playing calls, you don't know how long this consolidation could last. Yeah, Abby. Well, that's if you know the option game, you can do that stuff. For some newbies who just like to play straight up calls puts, it gets a little tricky. But that's the tough part about options, guys, right? When you're playing calls, straight calls, puts, not only do you need something to go higher, you got to predict when it's going to go higher by. It's not the easiest thing to do. And that's why, you like to have a lot of other things line up, right? Sentiment, maybe now, that's the beauty of sentiment. If you got bullish signals coming out of the sentiment camp, at least now you got a higher probability of that squeeze sooner than later, right? So, all that stuff just increases the odds in the option game. Otherwise, options are tough unless you buy time. But you guys don't want to spend money on time. You know that. But yeah, AMD looks great. CVX, I wouldn't buy any energy with your money, especially options, unless you're just rolling the dice. Energy's tough. I know CVX has been the better name of the bunch. Looks actually pretty good, but I can't trust this energy stuff. Why does CVX look better, so much better than the rest? Any reason? I know it's bigger, I guess a blue chip. Any reason why CVX looks so much better than everything else in the group? Oh, where they're located, McBob? Big on refining. Oh, okay. That makes sense. Yeah, because like Schlumberger, oof. How about Valero? How's that look? Just out of curiosity. I don't want to go on a whole oil binge. Wow, that got knocked down too. I don't know, guys. I'm being honest with you. I don't. I made this comment. We were talking about this the other day. If I could get a refund for all my crude losers over the last couple of years, oh my God. You know how much better my account would look if I could get a refund on just my crude losers. I just want my crude losers back. That's all. Yeah, it's been awful. It's been bad for me. I'm being honest. I don't think I've had a winner in crude. That's the problem. At least give me one winner. I don't think I've had a winner. Everything I've had has been faboots. SIG, I like it. It's dangerous. Uh, we were talking about this the other day. I think you got a great shot at a trade there. I think some of us already got a trade out of it. But if you're looking to roll the dice turnaround, you got that there too. Just more risk. You know what I mean? Just a lot more risk. But I like, what I liked about it, there was a put seller. He came in, kind of put in a short-term bottom for us. And then you had some call buying that was further out though with time. All right. So, gave us an idea that the weakness should be supported and maybe you get lucky on some upside there. That was into this day here, right? Was it this day? No, that's earnings. Could have been that day. It was one of these days. But yeah, it's worth a shot if you like, if you want to go blood fishing here. What are you looking for? You looking for just a trade, or are you looking for the whole enchilada? Looking to get lucky. It was the day after the earnings, right here. Oh, you know what happened, Pritt? It was red and it turned green. That's why I didn't notice it, right? It's showing an update here. Because I remember they bought it into weakness. And I'm saying, what the hell? That's why. Yeah. It's worth, again, if you like, it's worth a shot. It's worth a shot. C-Trade's talking about the Z put sellers. Let's see here. November 45 puts. November's. And they open, huh? That looks like decent size. Yeah, I'll take a look at it. C-Trade. As soon as I get off of here, I'll take a look at it. If any flow around it. Not that I don't trust you. You know what I mean. What are the names we got here? Uber and Lyft. This Uber, I like. If it could catch action here again, I think it's set up nicely. Yeah, definitely, C-Train. I'll shoot it out in the room later. So I like this one because what happened is, saw some decent spec action, then the action heat up, right? A lot of us caught a nice trade out of this one off that run. And, you don't want, sometimes you get lucky, you buy this breakout and it goes, right? But more than not, you get something like this, right? Or, sometimes it even stays in a like flaggy pattern there like that. All right. But even better, I like this because you could sense that people wanted to get long this name and they chased and now they're getting spit out. So what you want to see ideally here, you want to see sweepers come back and revisit this weakness right here. So that's I mean, that would be an ideal setup here. And the thing about these IPOs, I know this one's a big one, but sweepers in these IPOs in the early stages, they rip the cover off the ball. They really do. From the IQs of the world. Remember IQ when it came public? Let me see here. Probably a similar setup. See what I'm talking about here? Watch this here. See this? So you got that, right? And then you got people who wanted to chase that for a breakout and they wore them out a little bit and then started higher. There was a lot of them look like that. I think TME might have been sloppier. You guys remember this one? This was a nice run right here. See? Look at this. This is what I'm talking about. So this one might, this Uber might turn into something like this. So you see this move here? Similar, right? People chase into this, thinking, oh my God, a China IPO, 10 cent, blah, blah, blah. And, oops. You know, they weird them out. You see this here? Doesn't look that bad on a chart. You're in that, you're puking that up. And then they got it. You understand? So what happened is with this TME, I don't know if you guys remember, I remember it well, called initial sweeper activity, had this run, went quiet, and then they hit it aggressively again and it came out. So that's what I would look for in the Uber. All right, Lyft, I really didn't look at the Lyft. I know it had a nice rally. Let me see the Lyft. Oh, Lyft looks good too. If it can catch action. Lyft looks good too. I think I like the Uber setup a little bit better because it reminds me of some of the others, you know. But that's what I would look, keep an eye, close eye on action. And I say close eye, you really don't have to keep a close eye because you know when they get aggressive. You want to see same type of buying that came in when they bought here. Same type of buying. Tim is saying, FYI, these IPOs trade very well off flow and technicals early. Yeah. That's the point I'm trying to make. I agree, Tim. I agree. What are the names we got here? NVIDIA. Yeah. I don't know. This is tough. First you want to see a pretty decent bet. We've been seeing like small weeklies. So nothing notable out of flow, if that's what you're asking. You have several up days in a row, maybe off a breather. Yeah, pattern developing indeed. But again, this is another name that when they want it, they can hit it nicely. When they want it, they can hit it nicely. But it's going to be interesting, you see, because, and not saying if the markets rally, all these things aren't going to do their thing. They're going to have days they do their thing. But if you ever get that rotation into the trade war related stuff, and here's the thing, everybody's waiting for an agreement out of China for those names to get hot. What's the likelihood of that happening, you think? What's the likelihood that those names are going to get hot after an agreement so everybody could participate? There's no shot in hell of that happening. What's likely is going to happen is you're going to get flow and movement long before there's any agreement with China, and be factored into the equation already. Remember the semis, okay? Remember, again, I bring it up because it's the perfect example. There's no better example, all right? The semis into that January quarter, that was the worst quarter imaginable for these semis. Okay, this was a pit of fire going into that. Earnings were a disaster. Guidance was a disaster. And that's where they bottomed. You know what I mean? When the news was at its worst. So again, that's why not only based off that hedger chart I showed you guys, but those things are going to move long before any agreement with China. They've just been awful. Look at these things. Dead. Caterpillar at least is holding up. Look at this thing. Oh my God. My goodness. But I hate to tell you guys, the big money, right? Position wise, it's all right there. It's a matter of time. The big money to be made is going to come out of that disaster. TTD. I know you guys have been talking the world about that trade. I didn't play it at all, James. I didn't play it at all. Caught some sweeper activity the morning of this day, I think it was, and just exploded. Just exploded. But now this is a chase here now. Now this is a chase. We've been seeing small put action, which is totally normal in some of these things, right? The ZS with some call buying further out. The MDB, which we spoke about, which ran $50 in 3 days. But these things are just chilling right now. Yeah, I heard that MDB put guy doubled, right? So they nailed every side of this thing. Well, you know me, I don't play the puts, but I'm kicking myself in the rear end missing that long, Tim. That's what I'm kicking myself about. But this is what got in my way. The freaking E earnings. Tree saying, so if you saw MMM sweepers, would you take it? I'm already in MMM July underwater. So if I saw some more activity come into MMM, yeah, I'd add to it. I'd add to it. But what's funny, Tree? That's a great question you ask, because if I'm being honest now, okay, if I didn't see this, okay, I probably don't, because they've been so awful. You know what I mean? I probably don't. But because that there's confirmation of smart money getting into this group, I guess you could say, I'm more inclined to. Again, depending on the flow. If they really tattooed it, I'd probably buy it anyway. But you know my point. I'm looking for it now. I'm looking for it. You know what I mean? I'm looking for it. It's kind of almost like Tree. Pretend this was a chart of smart money positioning and energy. The way we feel about energy right now. You know what I mean? But we saw this, now maybe we take a shot, right? So that's kind of where I'm at. But I'm being dead straight with you guys. I don't even believe like the flow is going to be there. Like MMM caught a big bet, the one sweep, but it was one bet, right? We haven't seen anything since. Anything. It's remarkable. Names like Caterpillar. I mean, those of you who have been around, just last year, you guys remember, Caterpillar could get some nice sweeper activity. When's the last time we saw a Caterpillar bet over $35,000? There hasn't been one decent sweep in Caterpillar in a long, long time. Right? I think since, when was it? Probably, was it earlier this year or probably around here somewhere? Oh, it was over here, early in the year. Right? It's nuts. So, hopefully there's some rotation. Because it gets, I know you guys like the names like these things, but yeah, these things, they're up there right now, and they're crowded. So when they're crowded, here's the problem when they get crowded. We talk about this all the time. You get that quick trade no matter what, right? We talk about that all the time. You get some weakness, you could get that quick trade, okay? But the bigger move, where let's say you want to go out 3, 4, 5, 6 months and give a leash to that position, these are tough right now because they get choppy. They get choppy. There's a lot of hands in there now, but for good reason. Look at the moves. The moves have been nuts, absolutely nuts. Look at this. Even like the ZS, right? Look at that explosion. So it gets a little tougher up here, a lot tougher up here. Yeah, deer, I'm sure. I can't. I mean, deer. I don't remember a bull betting deer. God knows how long. All these things, Gordon. All of them. All of them. There's not one exception. All of them. It's been a massacre in a lot of these things. You know, some of them are holding up well, right? As you can see here, they're holding up at least. So maybe that's a sign. You know, maybe that's a sign that these things are finally, the sellers may have ran their course. But this is like if you get aggressive sweeper activity into these things, okay, and that's a big if, but if you do, you get a chase in this like you haven't seen because these things are so underowned. You know what I mean? You know how many funds out there that want to own these names? Like these are legitimate names. These aren't fly by night beyond stake, right? These are legitimate names that you can't own these things for a while now. They've done nothing, at best, nothing, at best. So again, we'll see. Like I said, I wouldn't be holding my breath. I wouldn't have any hope of that because it's been so long. Until I saw this, we got a shot. We got a shot, you know? I mean, what else could this has to mean the China trade war? I don't have any other takeaway besides that. You know? I see this as buying the China trade war weakness. No? I don't take away anything else from it. Anything else. South America, you see Brazil, honey? You see that move? By the way, oh, it's funny you mentioned that. I was just going to mention that, Ani. I own, I basically just took, oops, how do we get this off? I don't know if you guys remember. The G-Gal caught a big bet. I bought some of the Jans I wanted to add to it and never added to it because it looked awful. You know what I mean? I never took the initiative. So now basically I got a starter position in this G-Gal and this thing's starting to heat up. I still have that. You remember it, Trey? I still have that. You had it when you traded it or you just got rid of it? Because we were up on it for a couple days, I think. And then it went south again, right? Yeah. Yep. I think right here, yeah, probably around here somewhere, right? It had a little move higher, then went lower, and then now it's starting to gather some momentum here. So, but I don't have much. I don't have much at all. That, yeah, and that's Ani, you hit the nail on the head, man. You just hit the nail on the head. Okay. You guys remember, all right, those of you who are members, we did that Saturday sweep series, right? About sentiment getting close, right? Where we need to really pay attention and get ready for a squeeze because these days when it happens, it's like a blink of an eye. You don't even know what the hell happened to you, right? That's how fast things go down. And lo and behold, look at the squeeze. Look how quick it developed, right? If you weren't ready, like if you weren't aware that where sentiment was lined up and you were all caught up in that gloomy, bearish state, like most of the riffraff out there, right? And that's not a knock on them. I mean, that's just was the atmosphere at the time. This rally sneaks up on you so fast, you don't know what the hell hit you. And then, like Ani's saying, once these things start running, you're never hopping on that train. It's almost impossible. So that's why you got to be ready. You know that, and that's why I look at these things, guys. You know, they're just clues because everything's about timing. They're just clues, right? To keep an eye out, a heads up on where the smart money may be starting to position. All right, that's what this tells us right here. That's what this tells us. All right. No, I appreciate that, Tree. I know, but I appreciate that. But that's, you know, it, and you obviously know, right? That's why you thank me. You see how important it is, and how if you get distracted and you're not aware of these signals, you don't know what the hell hit you, right? You hear, oh, it's just a dead cat bounce, oversold, bear market rally. You don't know what the hell's going on. And before you know it, like Ani's saying, you got a freight train that just screamed higher. That happens so many times to me. Like, I give Tim credit. This EWZ was catching sweeper activity. Yeah, I know a lot of you guys don't play EWZ, but I didn't even pay much attention to it. Lo and behold, I see Tim talking about it, and then I see the chart. I'm like, holy cow, what the hell just happened here? What the hell just happened? Look at this move without even, I had no idea that was going on. No idea what that was going on right now. Yeah, that's why you gotta, that's why you gotta be ready, you gotta be on top of these things. And that's what all the things we look at, that's what they're for. You know what I mean? That's what they're for. Just they're daily reminders. They're daily reminders because it's so easy to get caught up. Yeah, this is Tim's chart. This is what he was talking about. So you see, look, so the break there from completely washed out, sentiment and all on your side, and that's where these powerful moves come from, And, I act like I catch these big moves. Obviously, I don't catch them more than I do. But if that's your game, you really need to pay attention to these things because, like I said, these things are all fine and dandy if you're looking to stay nimble. All right, you want to buy weakness, catch a snapback, But if you're playing equity or you're looking to build a position with some time, you're not as quick as you would like to be. Where they reel them in short and you get that squeeze, there's no better rally than that, and that's what we just saw in the market. Oh, reel them in, reel them in. Oh no, we're going lower. There's no buyers in sight, and then bing, 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 without knowing what the hell hit you. James saying, apologies, just to be clear, was that chart suggesting that a move higher is quite likely? The chart, this chart that I showed you guys on the Dow futures in simple English is telling you the smart money is getting long the industrials. There's no other way to reword it. You understand? That's all it means. Does it mean they're going to start rallying tomorrow? Right? Who knows? Next week? Who knows? But what it tells you is that since 2016, hedgers, where the game is to hedge, is net long the industrials for the first time since 2016. That's pretty significant. I don't know, JP. The only thing I could say is a lot of times it comes after this. You understand? Not you see it before this. Usually you see this, then you would see sweeper activity. Like that NASDAQ signal, we weren't necessarily seeing them get aggressive in NASDAQ names. And then lo and behold, a couple of days after we saw that NASDAQ signal, they were bombing away on, QQQ, TQQQ, all that stuff. So, yeah, exactly, Ani. That's, like I just mentioned, the China trade war stuff, everyone's waiting for a deal to own them. So what's the smart money going to do, Ani? They're going to own it before a deal, right? And price it all in and then sell it to the mopes when a deal happens. That's how they work. right? Yeah. Like I said earlier, what's the chances you're going to get a deal? A siren's going to go off. Buy the industrials now. Attention, all riffraff. Now is the time to buy the industrials, and we all make money together. Well, you know what I mean? It's not happening that way. So that's why we're going to keep our eyes peeled. All right, a couple more names. You like that, Norris, huh? A couple more names and we'll wrap it up. Roku. I don't know what to tell you. Thing's a beast. What do you want me to tell you about Roku? I can lie to you and tell you, oh yeah, it's going to go up one day this week. The thing's up every other day. This is not my cup of tea up here. A lot of us are kicking ourselves in the rear end for not owning Roku cheaper, a lot cheaper. But up here, this is not even on my screen right now. You know, this is not even on my screen. For me, it's a day trade, if that. RNG caught a little protection today. You know, action is rare in this name. You guys remember this name? Was an underbelly sweeper name that caught action for the first time way back here somewhere. Right? Yeah, over here. Under 100. So now it's up at 120. And there was a little piker sweep protecting. Yeah, Macy's looks a little interesting, but there hasn't been any action there, notable action. There's been some squeeze sweepers there, Micah. There's been some squeeze sweepers. That and Gap GPS, which is still in squeeze. I sold the Gap so quick today and took my 43 cents like I hit the lotto. This stock. I took my 43 cents on the Gap like I saw Christ. But, you know, this is still in squeeze territory. So it wouldn't shock me they squeeze it. You know, but there's been some squeeze flow there in the Gap. There's been some squeeze flow. I guess a lot of these squeeze names, some of them triggered the fetch, the TME, SIG, a lot of these beaten down names. You know, Target saw some action today, another retail name, but that's a beast. Look at that move. Look at that move. I played Common, Ronald. I've been playing a lot of equity. A lot of equity. You know why? Because I like, when I swing options, I like to build positions and calls with some decent time behind it. You know what I mean? So I'll go 3 months minimum, 6 months out, and I'm looking for high reward, higher risk type play. So if I'm going to be quick, I'd rather play the equity. Size up and I can stop myself out. I can be nimble, you know, especially the smaller names. You know, like I came out of some equity today. I sold the G Sky, made some nice profit there. G Sky, I know a couple of you guys owned it. I don't know if you're still in it. I got out today. I left a piece though. They're talking at an event tomorrow. I think GJT told me they're presenting at an event or something tomorrow. So keep an eye on that. There's been some decent flow there. You also got a niner here, I see. But I'm just giving the example, Ronald. Here's another one that, you know, down here I bought the equity instead of the calls. I just feel like I have more control over it, you know? I have more control over it. So the options I like for example, let's say Caterpillar, tomorrow we come in and into weakness, Caterpillar catches a Jan bull missile, or they get aggressive in Jan calls. That's my cup of tea for swing trades on the option front. You know, that's my cup of tea. But the same thing, like I'm not putting a stop loss, you know, I'm putting in what I'm willing to lose. And a lot of times I'll let them go to zero. So that's why with the equity, I'm not letting it go to zero. You know what I mean? I got a stop loss on everything I buy on the equity side. And a lot of times I'm quicker to sell on the upside in the equity, but I'll leave a piece if I like it. You know what I mean? Yeah, Ani, I got a quick trigger with the equity. Again, that's more the reason why I'm buying the equity, so I can be quicker, you know? You see, like for example, Gap, okay? Like if I played the calls, I'm still in them, and that's fine. You know, I'm still in them because I'm looking for more than that. But you know, I got in yesterday off the squeeze activity. Today they gave me 43 cents. You know what I mean? In a market that was reversing into red, I say, well, I'll take it. You know, you can't do that with the calls. So I just get a little more clever with the equity. That's all. The options I like to sit tight and let them marinate. Yeah, let it marinate a bit. NTNX, we saw a little action there, right? How's she looking? Oh, that's nice down there. Look at that. Laying dead. Yeah. And they could come after this team. They came after it, as you know, a couple times. I remember this gap down here. They bought it down there, sick run, right? A couple times off these gap downs. This does look interesting here. And you got a niner. Yeah, definitely keep an eye on action there. And you'll see, you know, it's not even just one sweep. They'll hit it 3, 4, 5 times. And it usually is a decent day trade. And, you know, a swing trade, if you want to give it some wheels, I think this was the last one off a niner right here. Gap down. They hit it and they got aggressive. You know, it was a nice day trade. Of course, I took that. But a couple people took it for a swing and you had a nice move out of it. You know, so there's candidates out there. There are definitely candidates out there. All right, guys. So we got a couple things to keep an eye on here, which makes it interesting. The market as a whole, the industrials, you know, some individual names. Keep us occupied as we go into the summer here. Hopefully we have some stuff cooking. All right. Enjoy the night, everybody. Thanks for tuning in. If anybody's new, go to wallstreetjesus.com. You'll get some more information there, guys. All right. Have a great night, everybody.